Now we have to ask if Goldman Sachs and Facebook are making a mockery of the Securities and Exchange Commission. That's what many are arguing after news broke that Goldman Sachs has set up a special purpose vehicle to allow their wealthy clients to invest in Facebook. Now, as part of the deal, Goldman Sachs will reportedly invest $450 million in Facebook. Digital Sky will invest $50 million. And Goldman is expecting to raise as much as $1.5 billion with a B from investors. This is despite the fact that Facebook is not a publicly traded company. And that's where the trick comes in. You see, the SEC requires companies with more than 499 investors to disclose their financial results to the public. But because Goldman is managing those investments, they will be considered just one single investor, even though they could be pooling the investments from thousands of clients. So are Goldman and Facebook having their cake and eating it too? Well, joining me from our studio in New York to discuss it is Joe Weisenthal, Deputy Editor of Business Insider. Joe, thanks so much for joining us. From your perspective, are what Goldman and Facebook doing here, are they illegal, if we look at the regulations put in place by the SEC?
Well, for one thing, I have to assume that Goldman has pretty top-notch security lawyers and doesn't think it's doing anything that is illegal. There could be some debate about this, and there is, this idea that they could buy a lot of Facebook shares, represent themselves as one owner and then slice and dice that ownership up. Some people say that that won't fly and that actually the SEC will see that for what it is, which is that those investors in the special purpose vehicle are essentially Facebook owners, and that perhaps this rule really won't help Facebook get around the 499 investor cap. I think, rather than seeing it as a snub to the SEC, however, the more interesting angle is perhaps a snub to the NASDAQ or the NYSE, because Facebook is becoming a public company. It probably will, its financials are going to get out. But it's not on any traditional exchange. It's doing it in a different way than any other tech company has done before. But it's, totally ignoring the traditional routes.
Well, why wouldn't Facebook become public now? I mean, what exactly is holding them back?
Well, for one thing, there's no need to right now. I mean, there's a lot of, regulatory scrutiny, not just the filing stuff, but just, in general, there's regulatory scrutiny and Sarbanes-Oxley and stuff like that. And, Look, Mark Zuckerberg is a notoriously private guy, and so it's totally in keeping with his persona that he would keep his company as private as it can be for as long as he can.
Well, I mean, I think we all like to have our privacy a little bit, but I mean, in this case, could you say that, by keeping Facebook as a private company, then of course none of the records are disclosed to the public. So then, could there be some kind of betting going on behind the scenes, some kind of bad assets that are being traded? I mean, could we be seeing the same thing that essentially brought down Lehman Brothers before the collapse?
No, I don't think it could be like Lehman Brothers. Look, I mean, there's a few different things. The key thing is, yes, there are going to be speculators and people who bet on the stock, but for one thing, it's going to be all like high net worth sort of accredited investors, and stock investing is always sort of caveat emptor, and people who buy into Facebook stock are going to have to be aware of the fact that they're buying shares that are less regulated, less transparent than others. But in terms of posing any systemic risk to the public, I don't see how it really hurts anyone. So it's a risk that people are going to take. In terms of ramifications for non-investors, I don't think that's a real issue.
Well, I think it's interesting that you mentioned, the people who are going to be investing have to realize that perhaps it's not as disclosed, because I have some interesting numbers here. Rumor has it that Goldman Sachs clients reportedly have to have a net worth of at least $10 million to even be able to get in to this arrangement, to even be considered to be a part of it. They have to invest a minimum of $2 million. Some are calling this an offer for plutocrats. Would you agree here? Are they the only ones that can make money here? By the time it goes public, no one else has a chance?
Yeah, actually, I would acknowledge that this is venture investing and private equity investing and hedge fund investing is a world that is off limits to the average investor, and this is kind of edging more towards public trading status, but still, it's essentially private investing, and that's always been a world of the rich. And for Goldman to do this is It's a very high-profile move for Goldman. It's a way for the bank to perhaps attract more high-worth clients, which is what they're going for. So yeah, it is a game restricted to the rich, but a lot of things are. I don't think there's anything particularly special or noxious about it in this case.
Yeah, but Facebook's for everybody, right? 700 million users worldwide. What happened to that?
Well, you can still get on it. Well, you can still get on it, and look, a lot of people are making money on Facebook in other ways. So people are starting companies and people are advertising their small businesses. So there's plenty of democracy to go around. This is just one aspect of it that's still the domain of the very well-connected.
But tell me this, I mean, do you think that the SEC, if they were to be doing something wrong here, if they do come to that conclusion, are they even going to go after them?
Yeah, I think they would. Look, you can talk about securities law and what technically doesn't violate rules and what does. But in the end, what actually matters to the SEC is does it look really bad? And if Facebook starts doing something, and I'm not sure what it would be that was really bad, or if there was some kind of insider trading going on, or whatever it is, the SEC would certainly find a way to go after the company, and whatever technical defense the company had wouldn't ultimately hold up.
Now let's switch gears for a moment. I want to go back to a story that I just mentioned, which is Obama, of course, has to fill a few positions in his cabinet. And from what we're hearing, William Daley might now be the chief of staff. Some people call this the second president because the position has so much power. And essentially, this guy is another Wall Street guy. Why do you think Obama would make that move? Is it really, is it just because he's from Chicago, or is it because he's trying to appease big business here, which, is a line that the administration has been repeating often?
It is kind of surprising, because it's certainly the base already hates it. The kind of left-wing blogs and everyone are flipping out at the idea of a J.P. Morgan banker being the chief of staff. There is probably this idea, people are saying that after the midterm he's pivoting towards big business. I don't know. I suppose, he needs to crank up the fundraising engine again. But, it's also just, the Chicago connection. Bill Daley is a competent, longtime Democrat. Who Obama is pretty comfortable with, and other than the fact that it'll enrage a lot of people on the left, someone like him is a safe pick. And Bill Daley is called a banker, but let's be honest, he's basically his career in business is closely related to his connections in politics. So it's not like he rose up through the ranks as a banker or anything like that.
Well, these days, do you think that it's possible to find anybody who wasn't at some point on Wall Street or advising some financial firm who's also involved in politics? It's become this really crazy revolving door.
Yeah, the revolving door is pretty remarkable, and it's disturbing. And there is this, it kind of what we were talking about with the Facebook stuff, this plutocracy element. And I think that in terms of long-term health and the long-term influence of Wall Street, it's worrisome. It's more in terms of this specific instance. It's kind of something that'll probably get some headlines for a while, but in the long term probably won't have much of an impact either way.
Well, I think a lot of people would just say, isn't Tim Geithner enough Obama? But who knows? We'll see what happens. Joe, thanks so much for joining us.